You know that feeling when you walk into an all-you-can-eat buffet and you're just overwhelmed by choice? Well, it turns out that feeling has a lot in common with investing. Today, we're going to explore how the simple act of building a good buffet plate could actually help you build a much smarter investment portfolio.
Come on, we've all been there, right? You pile your plate so high, you're excited by all the options, and then an hour later, boom, that wave of regret just hits you. It's that classic eyes bigger than your stomach problem. But what if I told you the exact same thing could happen to your money?
Yeah, I know it sounds a little strange, but your investment portfolio can absolutely feel that way. It is so possible to overstuff it, to create this kind of investment indigestion that can seriously hurt your long-term goals, and that, right there, is what we're here to avoid.
So, this brings us right to the investment buffet. At its core, we're talking about diversification, spreading your risk. But here's the thing, just like at a real buffet, there's definitely a right way and a very, very wrong way to fill your plate.
I mean, it's the oldest rule in the book for a reason, isn't it? In the investing world, this just means your entire portfolio shouldn't be one single dish, like one stock, or just one type of asset. You've got to have variety to protect yourself in case one of those dishes, well, doesn't turn out so great.
Okay, so this analogy really lays it all out perfectly. Think about it. Your plate, that's your portfolio. The different dishes on offer, those are your asset classes. Stocks, bonds, property. Piling on way too much of everything? Yep, that's over-diversification. And what about loading up only on carbs? That's just like concentrating all your risk in one single area. It's a really simple, but honestly, a super powerful way to visualize your whole strategy.
All right, so every good buffet plate needs a solid foundation, right? We're talking about the main courses, those reliable go-to choices that really form the core of your meal, or in this case, the core of your portfolio. And this is such a great way to think about it. For your core holdings, you are not looking for the most exotic, riskiest dish on the menu. No way. You're looking for that reliable roast beef, the solid, long-term investments that have really stood the test of time.
So the real key here is to build your plate around some tried and tested index funds, or what we call ETFs. An ETF is basically just a fund that holds a whole basket of different stocks, so you get instant diversification. It's fantastic. For example, a JSE Top 40 ETF gives you a little piece of the 40 biggest companies in South Africa. An S&P 500 ETF, same thing, but for the US market. These are your portfolio anchors. They're absolutely crucial.
Okay, so once you've got your main course sorted, it's time to add a bit of variety. We're talking about the side dishes, the things that complement the core and add all those different flavors and textures to your plate.
Here's another cool way to look at it. Think of your portfolio like a wardrobe. You need clothes for all seasons, right? Spreading your investments between local and offshore, that's like having clothes for a humid Durban summer and a chilly Joburg winter. And what about crypto? Haha, well, that's your Crocs with socks. A little bit quirky, maybe not for everyone, but hey, it has its place. So let's take a look at the different dishes available at this investment buffet. You've got your classics, equities or shares, bonds, property, and cash. Then you've got your alternatives like crypto. And please don't forget about the really important tax-efficient options like your retirement funds. The whole key is to pick a good mix of these. So what does a balanced plate actually look like? Well, a really classic starting point is the old 60-30-10 split. That's 60% in growth-focused shares, 30% in more stable bonds, and then maybe a smaller 10% slice for alternatives. But, and this is a big but, the perfect mix for your plate depends entirely on your personal goals and just how much risk you're comfortable taking on. Okay, a quick but really, really important word of caution here. When it comes to those exciting but super volatile side dishes like crypto, the golden rule is to keep it to a tiny portion of your plate. Seriously, think of it like a spicy chili sauce. It's a condiment, not the main course.
Now this is a super crucial point that honestly trips up so many people. The house you live in, your family home, it's a place to live. It's not a financial asset in the same way a rental property is. Why? Because it has costs, rates, levies, maintenance. It's a really important distinction you have to make when you're building your financial plate.
Okay, so you're at the buffet, plate in hand. How do you make sure you're making smart choices? Well, to avoid that awful feeling of investment indigestion, there are a few simple rules you've got to follow. Think of these 3 steps as your guide. First up, look before you leap. Actually check what you're putting on your plate. Read the fun fact sheets, look at the fees.
Second, and this is a big one, be patient. Once you've made your choice, you have to give it time. Constantly chopping and changing your investments, what people call timing the market, is a guaranteed way to get worse results. And third, don't overstuff your plate. Having too many funds can just mean you're buying the same shares over and over again, and just paying more fees to do it.
All right, so we've explored the buffet, we know the rules. Now, it's really about putting it all together to create a meal, a portfolio that's actually going to sustain you for the long haul.
And ultimately, this is what true diversification is all about. Look, it's not about avoiding risk. That's impossible. It's about managing risk. It's about spreading it out so you can handle the natural, inevitable ups and downs of the market without completely derailing your long-term plan. And this, right here, might be the most important takeaway of all. The financial world offers this endless, massive buffet of options, but you can't, and you really shouldn't try to have them all. The goal is to be selective, to understand your own needs, and to build a balanced, personalized plate that's just right for your journey.
Because that's really what it all comes down to. Investing is not a smooth, straight line. It's a roller coaster, for sure, with plenty of highs and lows. But with a well-diversified portfolio, it's like you're strapped in safely, and you can actually start to enjoy the journey. So the real question is, are you ready to build your plate and enjoy the ride?